Podcast is now starting. All attendees are in listen-only mode.
Hi everyone, welcome to the AbleSys webinar. We're on here and I'll be glad to answer your questions, help in every way that I can. We'll go over the charts today. I'm going to show a swing trading chart. A lot of people like to swing trade stocks and ETFs. So we'll take a look at what a chart looks like and where to buy, sell, put your stop loss. Just go over some of the guidelines that we go by. And we've changed a few things over the last few months. If anybody hasn't been here in a few months, where we've actually tightened up our stops and it's working out pretty well, actually really well. And we'll just sort of go over it because it's the same chart, same rules, same colors, same dots, same guidelines, no matter what you trade. Same thing with the accuracies, the same also. A lot of people around the world just use AbleTrend for whatever they like to trade in their countries and different time frames. That's fine. It's not going to work better on one thing or another. It just nobody knows what the price action is going to be that day. Really, we're all at the mercy of the price action. If it's a real sideways choppy day, well, nobody can win, us included. Fortunately, with the guidance chart, it'll at least keep us out of trouble. We won't get beat up versus not having the guidance chart. So that's important and really helpful to help to limit losses and just to lower your risk. So let's jump in and take a look here. I've got a 2-hour daily, and this is just for stock trading because market's only open 6.5 hours a day, and this is really helpful for that kind of a trade. I like it. I mean, you can use a daily, weekly. That's really good. But for longer term, some people don't want longer term. Some people do. It's just personal preference. There's no right or wrong. But daily, weekly will work fine, and you will always want AbleTrend TS on the lower time frame. In this case, this is a 2-hour, which is 120 minutes, 120-minute daily. And again, same colors and dots, same rules. Doesn't matter what we're looking at. But I just, a lot of people like to just, don't like the day trade. They want to just trade like swing trade. Great. So we'll look at a swing trading chart, and then we'll look at the, an E-mini day trading chart. So this is ex-US steel. It's kind of a good one for that, but you can pick anything that you like. You're going to get plenty of movement on most high volume stocks that have a little bit of volatility to it. So we're going to we're always looking for the same thing. Again, AbleTrend 3 on the higher time frame when we're doing like a daily, weekly, or monthly. You always want that AbleTrend 3 on the higher time frame. We always want AbleTrend TS on the lower, and then we want AbleTrend 3 on the upper time frame. And I'm going to make this a cross because I just like to make the higher time frame crosses. It just makes it certainly makes it easier for me with many clients as we have and everybody with different levels of trading knowledge and all. I like to keep it simple. This way we call it blue bar, blue dot, blue X. The first time you get all three indicators, we're long. And we're going to put our stop loss. In this case, this is stocks, just a few pennies underneath the bottom of that blue bar right there. We're looking for 3 green bars because 3 green bars kind of usually, kind of a warning that the trend's getting a little tired, and we want to try and capture as much profit as we can. Now, there's no way you're going to pick tops or bottoms. It's just not possible. We're really just looking to pick the bulk of the trend in the middle of the trend. Obviously, we want to make as much as we can and have as little give back as possible, but it's just not realistic to do that consistently. Don't forbid, because nobody can. It's just an impossibility to nail tops and bottoms. But we just want to do the best we can, try and get close as we can. So there's your 3rd green bar. Here's the lowest of the 3 green bars. So just put it again, a couple pennies below, the bottom of that, green bar right there, because you got 3 green bars in a row. And then it looks like, maybe here or certainly in here for sure, we'd be stopped out. But, we picked up a point on that trade. And this is swing trading is generally geared more for option trading. So, for option trading, and every one of these black lines is a new day. So it's only like 4 days later. So, that would have worked out fine. Here's your triple confirmation on the sell side where you're going to be buying puts. Now, there's a good chance that this red X was not there at that time. Could have been a blue X. So once once the bars close, they'll never ever change again. But you got to realize, when you've got when you've got a daily chart, I mean, technically it's got all day. It's really got all day before it can make up its mind. So you say, well, how do I do that? Same thing when we're looking at the 1 minute, 3 minute chart. Kind of does the same thing. A couple of people saying the sound's choppy, but there's nothing that I can do on my end about that. Sorry about that. I mean, that's just a kind of, I guess, kind of like an internet thing going on here. I mean, everything is working fine as far as connection. So sorry about the choppy part. Sorry about the choppy, the choppy in and out sound. There isn't a thing I can do about that because everything is connected properly. So maybe it's just some kind of an internet thing. Let me try and do something here. Okay, it's saying it's working okay on this end, so let me know. Does it seem to be a little bit better now? Things seem to be a little bit better on the sound. Very choppy audio. Yeah, I know. Everybody keeps saying. Sorry, I have no control over that part. I mean, everything is saying on my end that it is connected properly, and I don't know what else to do. So sorry on that end, but we'll just have to get through it, and I'll, if you catch a piece of it, well, then you just catch a piece of it. Some things are just technically out of my control. Diana says she logged out and logged back in, and it's much better. Oh, Drew says it's better, and Larry's saying it's better. Well, thanks for the feedback. Michael's saying the same thing. Logged out and logged back in, and it's much better. Okay, so I guess that's the key there. And again, I apologize. Log out and log back in again. I'll give it a few minutes here before we continue. So let's try that. Try logging out and log back in again. Again, sorry about that. I wish I could have more control over that part, but at least we just don't. At least we figured that part out. Drew's asking, are the results of NQ Weekly trading results posted on your website using these new rules or same rules as last year's results? Actually, it's the same as last year, Drew, and we've made it, actually a little bit even more accurate now by using the 3 green bar strategy or three green bar exit. Again, you got a short trade here, and once the price gets underneath this support points here, right there is where you're in. Okay, good, Anthony. Glad everybody's saying that the sound is better. Thank you for the feedback. Once you get underneath, again, you see this nice wall of support here. Once it gets below that, because again, technically speaking, the price can change intraday as far as a daily bar. Now, a 1 minute bar, after that 1 minute, it's final. 3 minute, it's final. Two hours, it's final. No matter what time frame you use, 30 minutes, 60 minutes, it's final once that bar closes. It will never, ever change again. So, but a daily bar has all day. So my point is right there is where you want to go short. And it's the same thing when we're looking at a 1 minute, 3 minute bar. As soon as the price gets underneath that 3 minute support, if it closes red like it did right here, we're gonna take that short right there. In this case, we're gonna buy a put. Stop loss goes at the top of the red bar, again, just a few pennies above. There's your third green bar, so there we're gonna put the stop loss just a little bit above there, so it's nice. We've moved that stop loss lower. Now, once the dots get below that stop loss, now we're gonna use the dots, second higher row of dots. So for example, right now the price is down here at $20. We bought a put here at up around 23. So we've got a nice little profit going here, and there's where the stop loss would go. Seems like the audio might be going in and out again, and again I'm just going to have to go fight through that part. So if there's anything you can do on my end, of course I would do it. Okay, so there's your there's your stop loss right now at the previous or second highest small red dot. We're going to jump over to the E-minis. This is an E-mini S&P chart. Really nice little trade here this morning. 9:30 is, I'm Eastern, so 9:30, of course, Eastern time is when the market opens. There's your trade right there. Triple confirmation, sell signal. Red bar, red dot, red X. The arrow is just an extra indicator called trend sig. You don't have to have that. I put it on my chart. Again, not needed. But it's just, it's just a fourth indicator. Obviously, really big down move there. There's your third green bar right there. 3 green bars. Stop loss is just going to go a little bit above that. And being that we have the red dots there, put your stop loss just, 1 tick above the red dot. Let's take advantage of that red resistance point there. That's a wall. That's going to block the price from going higher. So instead of putting it on the dot or below it, or just put your stop loss even just, 1 tick above that red dot. Let's take advantage of the resistance dot there. Remember, those dots are like a wall protecting our money. So let's put the stop loss on the other side of the wall, because often the price hits the red dots, like right there, bounces off and goes lower. So let's use it to our advantage. We'll put the stop loss 1 tick higher. And if you missed the beginning of that trade, or you missed this sweet spot, well, you had another chance right here. Prices went right up to the red dot, and if it's within a half a point on ES, that's a valid sweet spot. If it's within 1 point on NQ, that's a valid sweet spot. Ideally, we like it to touch it. But, we're not going to get a magnifying glass out and get too technical, especially when we're in the heat of the battle and things are moving quickly. If it gets right up to it or just about right to it, good enough. And that worked out nice also because, down it went. Stop loss again, just a little bit above that red dot. With the stop loss, close of that red bar or the open of the next bar, we're short. There's your 3 green bars in a row. Again, put the stop loss just 1 tick above that red dot, we're out. Okay, so, we picked up another point and a half, maybe even 2 points on the stop out right there. Losing trade here, valid signal, stop out right there, slightly above the top of that red bar. We'd be out. Get back 2 points there. Obviously a no trade zone there, which is a good thing because it went sideways and choppy. We had another low risk trade there and gave back a point and a half, even let's call it 2 points, because it went above the top of the red bar right there again. Now we come into the, no, actually we didn't. We had a buy signal. Dead zone is between 12:30 and 2. Remember, 12:30 and 2 is the dead zone. We don't trade during that period. You can do whatever you like, but we don't recommend trading during that period because Jesse did a great study and found out it was just break even. Over thousands of trades, the odds say you're going to break even. Now, some days, maybe you would have made money, but we got to play the percentages because before it happens, obviously we don't know what's going to happen. If we did, knew that answer, we'd never lose. There's a buy signal right there. There's your third green. It's basically small winner right there. Maybe a half a point to a point because we're long right there. Stop losses right there. Oh, actually, we're stopped at right there. Because as it turns out, we put the stop loss just a little below that green bar and it went back up again. Sometimes we get lucky on those trades. We just kind of get a little more juice out of the trade. But then it did come down and we'd be out over there. So it was about a point winner. We'll just leave it at that. Pretty much no trade because now we're in the dead zone. Actually, we had a winning trade here in the dead zone, but we don't trade during that period. So we're going to look for a sweet spot in this case. And right at about 14:01, which is 2:01, that's a valid sweet spot. It's 2 o'clock Eastern, which is 11 Pacific. Stop loss again. Being that the red dot is so close to the top of the bar, let's take a little advantage of that and put it 1 tick, quarter of a point above that red dot. Just gives us a little added protection because we've got the red dot between the price and our stop loss. It's nice when we've got the red dot in between. Down it goes, and we're going to move our stop loss down, and it looks like we're going to get ticked out right about here. Okay, it's okay. About a 2 point winner on there, so that's $100 per contract. We're going to go short again right there, and we're stopped out right there, so we lost a half a point there. And then we're back short again there. Red bar, red dot, red X. There's a sweet spot. Sweet spot, prices pull back up to the red dots, and they go from green to red. The close of the red bar, well, the open of the next bar, we're market short. Market short, 3 greens in a row. Here's where it came into play, where we did not get stopped out by just automatically getting out on the 3rd green bar. We put the stop loss a little bit higher. Look what happened. We picked up some extra juice. Ooh, I love those trades. Picked up a little extra juice there. Again, there's your 3rd green bar. The stop, being at the red dot, is so close. Let's just put the stop loss just 1 tick above that red dot. Again, we picked up some extra money right there. It never got out so far. Still never got out. Now the dots are coming closer. Once the dots go under our stop loss, if the second higher row of red dots is below where our present stop loss is, we always want to look for any way we can move the stop loss lower, because that's just going to lock in a little more, lock in a little more money. Okay, 3rd green bar. So now we put the stop loss there. There's the previous higher red dots. There's your 3rd green again. Put your stop loss just a tick higher. Finally, we're out on that trade right there. We do get stopped out. So we're out at 42. We're out at 43. And on the sweet spot, we shorted it at 48. That was nice. That was 5 points times 50 a point. It's 250. That was a really good trade right there. That was a nice little winning trade right there. 250 per contract. Pretty much the end of the day from there, although we did have a losing trade, as you can tell, I point those out too. I want to be very realistic and very fair about that. I don't sugarcoat it or cherry pick. I tell it like it is, good and bad, because that's how I would want to be treated. So, when we did get out over here, we did give 2 points, about 2 points back on that trade. And we had a buy signal right there. Again, valid buy signal right there. And with the stop loss a little bit under the blue dots, hey, we gave another 2 points right back there. So we get back pretty much of what we made on this trade right here. And it's pretty much the end of the day. Yeah, actually, we had a winning trade toward the end of the day right there. So I'm not even going to count that. Let's just say day over. But it worked out okay. Made a little bit of money today, and really the early trade of the day was the key. How to get in on that trade right there. If you missed that trade, you kind of missed the best trade of the day. And there's usually one really good trade of the day. Today there was kind of 2, but here's a key. When you see a big giant down move like today, we picked up, had a really good trade right there, and that was about a 12, 13 point winner right there, 600 plus right there. But the point I want to make is when you get this really big down move, look what happened for hours after that. Just choppy sideways. When I zoom out and look at the whole picture right here, wow, and then you really could see it. Big down move, and 9 out of 10 times after a big down move, it gets really sideways and choppy. Now we got to take the trades because we don't know what's going to, we don't know what's going to happen after that. We got to take all the trades. Just no way you can't. There's no way I mean, obviously, if you knew before the trade, we'd never take it. We'd never take any of the losers, and it'd be a perfect system. That's not reality. So you got to take it. But also, just kind of keep in the back of your mind, usually after a big down move or a big up move, the market has to digest it, like you had ate a big meal. So, kind of goes usually gets quite choppy after that. Another thing, just as a little helpful hint, after really long bars, the market usually pulls back. Boy, I hate getting in at the top of a bar. For example, here's a valid, actually, here was a valid sell. No, it wasn't. It was in the dead zone. But let's assume it wasn't. Triple confirmation sell signal. Look how long that bar is. You know what? Instead of getting in at the bottom of the bar, at the close, at the open of the next bar, more points on it. Just stall for an extra couple of minutes. Michael J saying send another cheat sheet for setting up AbleTrend. You'd have to check with tech support on that, Michael. They'd be better to help you on that one. Michael K says on the buy and sell signal, do you always put the stop at the, hold on, always put the stop, oh, there we go. Do you always put the stop at the top or bottom of the bar? Yeah, half a point away for NQ, just give it a little extra room, half a point more, or 1 full point for N, 1 point for NQ, half a point for ES. I think that's a real good place to put it. Pam says, I missed the whole thing about the long bar because your audio is not working again. Sorry, Pam. The thing with the long bar, I'm saying, is instead of just instantly getting in at the close of that bar or the open of the next bar, wait a couple extra seconds because 9 out of 10 times you get a really long down bar like that. Look what happened 1 minute later. It went back the other way. Here's a really long up bar here. Look what happened a couple of minutes later. It went back down. So you can't wait a couple of minutes. All I'm saying is even if you went long here, instead of there, you saved yourself a point. Because usually after a long bar, the market reverses. It might only be a half a point or a point or two, but you know what? Let's try and cheat the market and pick up as much as we can. Michael said, if you missed the 933 entry long bar, because that was a quick move, by the way, at that point, so I could certainly see if somebody did. It was a really fast move. Was there another entry right before the sweet spot? No, there's no rules for that. You gotta wait for the sweet spot. No, there's no special rule that you may have missed or something that I've said. No. Next thing you got to do is either wait for an opposite colored bar, a reversal or a sweet spot. There's nothing you can do. I mean, yeah, in this case it would have been great to get in, but how about 1,000 other trades where you might have done that and it would have lost. It would have been, so we just got to stick to the rules and stick to the guidelines and be a robot. That's the hardest part because of the emotions. I totally understand that. I totally believe it. I totally agree with that. It's the emotional part that we all kind of mess up on. But the more you can put the emotions aside, I guarantee the better you'll do. Because the software has no emotion, and I mean, it's been consistent for years. So just try and do it. Yeah, robot Michael, the only way. You got it. I was cracking up when you said that the other day. That is so funny. But it's true. Good point. Thanks for being here, everyone. Have a great night.